Hi there, it's Walter here from FX Jake, and I wanted to take a look at this chart here. This is the Pound Aussie daily chart, and there was a question on the Naked Forex Now trading forum about this setup. Now, I don't actually consider this trade to be a kangaroo tail because the open and the close of this candle they're not. It's not in the top third of the range of the candles. So that doesn't qualify for me. I know some people may have a slightly different candle if they have a midnight GMT time close. Mine's a 5 p.m. close on my chart, so it's going to look a little different, and it doesn't really look like a nice setup. It does obviously print on a really nice level where you have support, resistance, 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 and it looks like support. And although this candle is looking fairly bearish today, we still have about 9 hours before it closes, so I'm not really sure what it's going to end up looking like in the end. And I wouldn't really want to comment on this daily candle until it closes because they can change quite a bit. I mean, for example, today's kangaroo tail on the Euro Aussie, this candle was in the red all day during the Asian session. It wasn't until the open of the London session that it really started to go blue, and and it still may change by the end of the day. So these things definitely will reverse, and we never really know what the candle is going to close like until the end of the day. The things that I don't like, though, about kangaroo tails are those that have sort of inside candles, and I find them to be fairly unreliable. As most of you know, I like to trade those kangaroo tails that trigger almost immediately and go higher. Doesn't mean that they're going to be winners, but I found them to be a little bit more reliable. So, for example, you have this setup right here. Let me zoom in so you can see. This is the New Zealand yen. And here's a nice kangaroo tail off of recent support, really nice candle. But unfortunately, the candle sort of just sits here and doesn't really go higher. And then the next day, it also sits inside of the candle. And then finally, the third day, it actually comes down here and would have taken out the stop below the tail here. So it's definitely a losing trade. You also have another one here. Some people might look at this one and say, oh, I don't think this is a kangaroo tail because, again, it's sort of like the Pound Aussie one where the open and the close are not in the top third. But then the next candle prints inside of it. And guess what? The pair falls through. And I see that happen more often than not. I prefer to take setups like this one where the open is inside the previous candle's range and the open and close are in the top third. And also, this one obviously immediately broke higher. That doesn't mean that it was a winner because for some traders who didn't move their stop loss to break even, this would have been a loser because even though it did break higher one day, it never really made it up to these lows up here, which would have been a clear target, and it fell immediately and took out the stop a week later. But that's the type of thing that I'm looking for because I found those to be much more reliable in terms of continuing on in the expected direction. Now, there is one exception. If I look for kangaroo tails, see, here's another one right here. You have this kangaroo tail here, and then this candle doesn't break higher, and then you get another one here inside. And it does finally eventually break higher, but then it falls back down, and that would have been a loser as well. So I really like the ones that break immediately. I mean, that's just the way I like to trade them. Like, here's one right here. There's a kangaroo tail off these lows. It did break higher the next day. Then it messes around for a few days, but it never takes out the stop. And it keeps closing near the entry spot. You can see it closes really close to the entry spot all 3 days, and then finally, eventually, it does go higher. That's the kind of one that I would have patience with. There is one exception, though. Some kangaroo tails will print, and then the next day will print a giant one that sort of engulfs the first one. And those actually are quite good. So it's sort of the reverse of an inside candle. So let's see if I can find one here where, you get a kangaroo tail, a little one, and then a bigger one after. I think I did have one on the Kiwi. Was either the Kiwi or the Kiwi yen? Let's just double check. Let me go back and find it. But basically, here it is right here. Yeah, this is in 2010. So here you have a kangaroo tail, and you go, well, that's not really that nice. It didn't come down to where these lows were. Didn't really extend long enough to touch the recent level. And then the next one is even longer and looks much nicer. This is the type of setup I would be likely to take, because what normally will happen here is you'll have a subpar kangaroo tail, and then you get a beauty that it sort of engulfs it and has a longer tail. And then you can see this one did break the first day. Came back down, but never took out the stop, because remember, the stop's below the low here, and then it did rocket upward. So that one would have been nice. But usually the reverse of that, if this was flip-flopped where I had the big kangaroo tail first and then the smaller one second, for me that would be a no-go. I wouldn't want anything to do with that one. Hopefully this helps. I hope you have a wonderful trading week, and I wish you happy trading until the next video.